Hey guys, welcome to my channel. This is Real Estate Market Forecast for 2023. Calgary Real Estate Board and their team of economists, they publish annual real estate forecast, and in this video we will review it. It speaks about what impact inflation, interest rates, home prices, sales and inventory, population and immigration, and employment have on the outlook of our real estate market. Also reviews the risk of the forecast and buyers and sellers considerations. So let's start with a broader look at the housing market. Elevated lending rates are expected to weigh on sales in 2023, bringing levels down to the record high in 2022. However, the forecasted sales of almost 26,000 in 2023 levels are still expected to be higher than the activity reported before the pandemic. Recent growth in migration and employment is expected to help offset the impact of higher lending rates, keeping annual sales activity higher than levels achieved throughout 2015 to 2019 period. The growth in new listings in 2022 was not enough to offset the gains in sales, and supply levels have remained low, especially for the lower priced products. The higher lending rates are expected to weigh on listings growth in 2023 as well, as it has become more challenging for a move-up buyer. While improved starts are expected to help support supply growth. Thanks to the strong migration level, supply levels are not expected to report significant gains. The low starting points and limited upward pressure on supply in 2023 is expected to prevent any significant downward pressures on prices as demand normalizes. However, conditions are expected to vary depending on the price range and property type. Higher price homes are expected to see some downward price pressures as the segment of the market is not experiencing the same supply constraints. Meanwhile, supply declines relative to the sales for lower price point properties are expected to continue to support modest price growth. Declines in the upper end market is expected to offset the gains in the lower end of the market, as total residential prices in Calgary are expected to stabilize in 2023. So let's review economic factors. Here are a few top considerations. Lending rates. Well, with the rates not expected to ease until 2024, higher lending rates throughout 2023 are expected to weigh on a housing market demand. Another consideration is migration. Recent gains in migrations are expected to offset the impact of a higher lending rates, keeping the sales activity stronger than pre-pandemic levels. Followed by employment. Well, recent job growth in industries beyond what was impacted through the pandemic is expected to prevent a more significant adjustments in a sales activity. And the last, supply. Low inventory levels, especially for the lower priced product, is expected to prevent widespread price decline in our city. Alright, so what is the economic outlook? Well, the aftermath of the pandemic, along with the geopolitical issues impacting global energy market, has left many countries facing challenges with inflation and rising interest rates. The persistent inflation in 2022 has triggered significant rate hikes from Bank of Canada this year, moving it from 0.25% at the start of the year to 4.25% by the end of 2022. These recent shifts are expected to weigh on consumers and businesses in 2023, causing the Canada economy to slip into the recession. However, given the tight labor market and persistent supply chain issues in some sectors of the economy, the recession in Canada is expected to be mild and very short-lived. So, what will happen in Alberta, and more specifically, what will happen in Calgary? The strength in commodities is expected to cushion some of the economic impacts of a higher rates we will have in Alberta. While economic growth is expected to slow, forecasters are not calling for a recession in the province. At the same time, the strong flow of immigrants to the province, along with the job growth concentrated in generally higher paid industries in Calgary, is expected to offset some of the impacts of the higher lending rates are having on the housing market. Well, we know that every forecast has some risk associated to it, so let's talk about it. As the market transitions away from the pandemic, also known low interest rate fueled growth, we are expecting to have different trends in the market based on a property type and a price range. Moreover, thanks to the record high sales achieved early in 2022, The year-over-year adjustments, especially early in 2023, will be far higher than the changes expected over the second half in 2023. The largest risk to the forecast this year is centered around home prices. Now I would like to talk about buyer and seller considerations. Supply gains have mostly occurred in higher price ranges, while supply levels remain low compared to the demand in lower price homes. So, while total residential prices are expected to be stable in 2023, the buyers and sellers are likely to experience different price movements based on a property type, price range, and the location. So we mentioned there are some risks to the forecast, so let's talk about the upside risk to it. Interprovincial migration seeking home ownership may be less sensitive to the rates should they be coming from a higher price market supporting stronger than expected demand. Supply level remains strong across all property types, resulting in stronger than expected price gains. Downside risks to the forecast. Uncertainty surrounding environmental and energy sector policies and investment impacting the future growth. Should inflation pressure not ease enough, requiring further rate gains, we could see a higher than expected pullback in sales activities relative to the supply level, causing downward price adjustments. Alright, so I would like to give you a coast-to-coast comparison and how is Alberta different. The pandemic and ultra-low lending rates contributed to a housing boom across the country. However, the price gains in Alberta were not as strong as in the other parts of the country as we entered the pandemic with the market that favored the buyer. Before the pandemic, Alberta's economy was struggling as the drop in energy prices in 2014 resulted in a significant job losses, loss of migrants, and an economic contraction. By the end of 2019, the home prices in Calgary and Edmonton were lower than the levels reported in 2014. Meanwhile, the country's largest cities didn't go through the same economic hardship, and over the 5-year period, prices has risen significantly over this time. When the pandemic hit, those larger centers had less supply in their market, and the sudden growth in the demand caused the price gains that were significantly higher than what was seen in our cities. Calgary home price only recovered in 2021, and while supply challenges compared to the demand did result in stronger gains in 2022, over the pandemic period, price growth were still half of what was seen in other centers. Recent rate gains have had more of an impact on home sales in Toronto and Vancouver. Slowing sales in this market have impacted the national numbers, prompting many to forecast price declines in Canada. It is also important to note that even with the forecasted prices declines expected in the large markets in our country, those declines are not expected to ease all gains that occurred through the pandemic. While Calgary and Edmonton are not immune to the impact of inflation and higher lending rates, they have not experienced the same level of gains and are not expected to go through the same level of declines. Furthermore, thanks to the higher commodity prices, a shift in interprovincial migration and relative affordability, Alberta is not expected to face the adjustment in other parts of the country. Alright, let's talk about the lending rates and inflation. Easing inflationary pressure is expected in 2023, which should prevent any significant rate gains this year. While the depth and duration of the national recession can impact both lending rates and inflation, the Bank of Canada is not expected to lower overnight rates until 2024. However, we could see narrowing spread on mortgage lending rates before the end of 2023. Another important factor is population. Over the last 3 quarters in 2022, Alberta saw a surge in both international and interprovincial migration, contributing to tighter rental markets and ownership demand. Continuing economic growth and relative affordability is expected to support elevated migration levels well into 2023. Much of the interprovincial migration has been driven by people moving from Ontario and BC to Alberta, as you can see here. The recent shift in migration is expected to help offset the impact of higher lending rates and support a housing market that is stronger than pre-COVID levels. We cannot talk about the forecast without giving you an employment update. Calgary has seen the largest gain in employment in the province, as it is benefited not only from the job growth related to the removal of COVID restrictions, but also reported the strong gains in professional, scientific and technical jobs. Job growth is expected to slow in 2023 to 1%. However, previous gains in professional jobs and further gains in a sector such as healthcare should continue to support a relatively strong housing market. It is expected that employment growth will be 1% and unemployment rate about 5.8%. Alright, let's talk about housing supply and new home impact to it. Calgary hasn't faced supply challenges for some time, but the resale inventory ended in 2022 at the lowest levels seen since the financial crisis in 2005. While some of the supply challenges are expected to be addressed by a new home sector, there is no indication that current construction levels relative to population size will create a scenario where it will see too much supply come to the market. This is especially the case with apartment-style product, where nearly half of the total starts this year are intended for the rental market. At the same time, new supply in a detached homes tends to be at the higher price points, provided limited supply relief for the lower priced detached homes. The larger concern is that supply levels remain exceptionally low relative to the demand, which could prevent home prices from stabilizing this year. Now let's take a quick look at the Calgary resale market in 2022. Last year, sales activity was expected to be strong in spring and slower in the second half of the year following rate gains. What was unexpected was the record high levels of sales achieved early in the year, resulting in a record year for sales. The anticipated raise in lending rates caused a surge in sales over the first quarter in 2022. Conditions in the city started to shift by June after the third consecutive rate gain, and a steep price gains caused sales to slow in the detached sector. Thanks to the strong gain for the raw and apartment properties, citywide sales reached record levels in 2022. At the same time, the growth in the new listings in 2022 was not enough to offset the gains in sales, and supplies level remained low, especially in a lower price products. Prices rose over 14% from the end of 2021 to the peak in May of 2022, as sales growth far exceeded the additions to supply. From the peak in May to the end of 2022, prices declined, but not enough to offset the early gains, as annual benchmark price rose by 12%. Detached home sales saw the steep rise early 2022 with a significant pullback later in the year. The main difference in the decline later in the year offset earlier gains, and annual sales fall by 7%. While higher lending rates did impact sales activities, the decline was driven by easing sales in lower price ranges. The sharp decline in the new listings for home priced below $500,000 provided limited options for potential purchasers looking for affordable detached homes, restricting the sales in those ranges. While annual sales did grow in higher price points by the end of the year, further rate gains did slow down activity in the upper price regions as well. While conditions were tight across all price regions throughout the spring, supply gains later in the year were limited to the upper price ranges, resulting in different conditions that were dependent on the price. By the end of 2022, the results were persistent: sellers' market conditions for lower price homes and balanced conditions for the upper price ranges. Overall, recent price adjustments did not offset the earlier gains, and the annual price remained 14% higher than in 2021. As we move into 2023, we anticipate that supply levels will remain relatively low for the affordable price points, as the higher lending rates will prevent more move-up opportunities for the buyers and prevent sales growth into this category. At the same time, much of the new construction tends to target at the higher price ranges, limiting the options for consumers in the lower price ranges. Also, supply levels are expected to rise to the highest price ranges relative to demand, which will cause some downward pressure on prices, outweighing any gains that may be occurring in the lower price ranges. Overall, detached home prices are expected to ease by less than 2%. Let's talk about semi-detached homes. Earlier gains were offset by pullbacks later in the year, leaving annual sales just slightly below last year's records level. While sales did ease in 2022, Some of this has related to significant drop in new listings, leaving limited choices for prospective buyers to look for more affordable products. Overall, the months of supply did improve in the later part of the year, but remain low relative to the historic levels. The persistently tight conditions did support annual benchmark price gains of 12%. As we move into 2023, sales activity is expected to ease relative to the high level achieved over the past 2 years, but remain stronger than activity reported before the pandemic, as purchasers continue to seek out for more affordable options in this market. At this time, additional supply options coming from a new home market will add choice to the market. Supply gains are expected to help support more balanced conditions, a takeoff the pressure of prices, which are expected to stabilize this year. Row homes, townhouses. With a shift towards more affordable housing options, raw sales activity hit a new record high in 2022. Earlier in the year, the new listings helped support stronger sales. However, like other property types, pullback in new listings occurred in a later part of the year, causing inventory levels to drop to some of the lowest levels seen in nearly a decade. The persistently tight market conditions support the annual price gain nearly 15%. Higher lending rates will continue to draw purchases to this segment of the market, but supply levels will likely remain relatively low in 2023 compared to the sales, preventing any significant adjustments in prices. While we don't anticipate prices to ease in this sector, the pace of growth is expected to slow under 1%. And finally, let's talk about the apartment segment. Shifts in the apartment condominium sector took longer than the other property types, as the segment was struggling with the excess of supply for many years. In 2022, sales activity was higher than the previous year in every month, contributing to record high sales for the year. The demand was partially driven by those looking for affordable options in the housing market. And at the same time, raising rental rates are also thought to increase condominium ownership demand from investors. Surge in sales in 2022 was only possible due to the level of new listings available to this property class. While the growth in new listings helped support the sales, the growth in sales outstripped the additional to the new listings, and inventory eased as the market of supply. The tighter market conditions supported the price growth, as the annual benchmark price rose by nearly 9% in 2022. Rising prices combined with the higher lending rates are expected to cool sales activities in 2023. However, the relative affordability of apartment and condominiums and rising rental rates are expected to keep ownership sales for apartment condominium above long-term trends. While some supply relief is likely to come to the new home market, it still will take several months before the market shifts into a more balanced territory. While there could still be some price adjustments, overall benchmark prices are expected to start to stabilize this year, supporting a modest annual growth of 1%. Well, this is the end of 2023 forecast. As you've noticed, and I said a few times throughout this review of the forecast, different property types on different locations and different price points will behave differently this year. If you need an advice for your particular situation, please don't hesitate to contact me.